Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elconin, along with Brianna Valesky, and we have Scott Redler on the line, chief strategist at T3 Live and T3 Trading Group, joining us here on this Monday morning. Scott, we got a lot going on in the markets here after that triple witch expiration. Are you a believer in this bounce this morning?
I'm trying to figure that out actually as right before we got on the phone because I did my morning call and I was looking at all the charts and I feel like I'm coming in today flat and I somewhat have short in the brain where I think I should be shorting the bounce somewhat. I'm not sure if you could just short the open, but I feel like I mapped out some levels where if the bears want to keep control of the market that they took back after that big top and tail after the Fed on Thursday and the downside follow through on Friday. I do think that the market shouldn't get back above like just say spiders like 198.60 to 199.20. That's like the gap from Friday. If we get up there and fail and get rejected there, I feel like that's a spot to put in some shorts. And there's also a micro spot around 197.30. But I have a tiny bit of a dose of skepticism because even though we sold off hard Thursday and Friday, there were some stocks that didn't fall apart. There was some relative strength. And, I do think that instead of shorting strength, if we're going to really go down and retest those August lows, I feel like, I might be able to catch a short easier without getting run over if we were to break below, Friday's low or that 124.25, which was such big support about 2 weeks ago.
No, I'm here. Yeah, I'm looking at the market here, and I'm seeing 64 and a quarter. That's your pre-market high. I see the intraday high from Friday at 67 and a quarter. It's just that if you get caught in this area, there's really, you really got to cut it short because there's just nothing in there from Friday's activity coming back. It looks like we're coming back down a little bit now, but let's go to the big dog right here, Apple. Now that thing opened up on its low and just hung in there all day. Flirted with Friday's high in the pre-market. Actually got over it. Friday's high 14.30. We got to 14.50 here. Give us your thoughts on Apple today.
Apple has been really good to traders. I hate to say, like a lot of people it's down a lot this year, but this stock has been a very good indicator for us. It broke down before the market broke down. It then broke down before that little Monday flash crash, and then believe it or not, it broke above. Remember that resistance, which was first at 114, ahead of the market, giving some clues that they could resolve that wedge that we're all watching the S&P to the upside earlier in the week before the Fed. And then Apple started acting weaker on the Wednesday into that Thursday, and pretty much telling traders, guys, don't get too excited. You might fail at resistance. So I think the next day or so will be interesting to see how Apple holds up. And it did, I saw the relative strength, like you just said, on the last 2 hours of the day in Apple. And I actually tried buying it a few times, but then I didn't decide to take it overnight. So I'm gonna wait a little bit. But if it gets above 114.30 and holds above it,
there you go.
I would think that would be a little constructive, and I don't think the bears are going to have too much, power if all of a sudden Apple gets above 114.30 and holds it. If Apple, fails there and goes red, that can give you some clues that there's going to be more weakness to come. So I think continue to use Apple as a barometer because it's been leading, and both ways for most of this year actually.
Yeah, I noticed also on Thursday, it was a little bit flat, and then on when we had the Fed rate decision, that ridiculous move over 2,000 in the SPOOs, which shook me out of all my shorts. That did not even clear.
Sorry to laugh.
What'd you say?
Unbelievable the way they do that.
Oh, they cleaned me out, and I looked at it, and then it started to come back down, and I'm like, am I going to chase it now if it goes back? Because I'd been really focusing on those former highs. He had the triple top right around right around 1990, and that was my barometer. So when it got 20 points away from that at one point, you're like, hey, I'm wrong, and then it reversed back. But let's look at some other issues here. Amazon had a real strong week last week. Give us your thoughts on Amazon.
Yeah, Amazon earlier in the week, I listed a pivot around 532. I was like, if you can get above 532, it could get some power, and it did it before before Thursday. And then the crazy thing was though on that Thursday when they sold the market off, it didn't go down. And then I know on Friday, when the market had the downside follow through in the indices, some traders were trying to short Amazon, saying, why would this hold up if we're that weak? And Amazon actually went green and held 532. So I think, Amazon could give clues that if it hangs in there and if Amazon actually takes out that 2-day pivot, which is 546, 547, I think that'll, give some bears a little bit of a brushback, saying, you know what, we might be weak, but not everything's falling apart, which then also, I guess, gives me some kind of thinking that we might not test those August lows. Because remember when the market broke down in that late August, like right the day or two before it happened, all the high beta tech just gave way. Once we broke, they were like, okay, all of a sudden they sold off Amazon, they sold off Facebook, they sold off Google, they sold off Apple. So now they tried to sell the market off Thursday into Friday, and some of those names didn't get really hit too hard. So maybe it gives us some clues that we might have some sideways down, but not like the volatility downside that we saw, a few weeks back.
Is the story over in Netflix here? We made that all-time high after the stock split, ran up, just have had some really crazy volatility in it. Now, dipping and diving around the $100 level. This looks like a pretty tough trade as of late. What do you think? You think this is a glamour stock that's maybe going to take a back seat here while the market digests, the Fed moves?
It got weaker, in earlier September, but last week Netflix was my number one trade actually. We talked about the red dog reversal, a number of times on the strategy, and if you look at the candle on September 15th, they tried to push it below that pivot support, and it went as low below that 94.33. If you look there, and then you got above there, and that was your red dog reversal entry, and I actually got long that day. The VTF saw me get long it. Then I held it overnight, and then it cleared that pivot, got above 99.65 and went as high as 104. So that 2-day calculated trade, the story might be over, but it doesn't mean the trade is both ways, especially if you use a calculated fashion. So now with the 2-day pullback you saw in the market, Netflix didn't go back down to those lows. It held within that second candle. So I would say watch Netflix also for clues of the market. If it could hold 100.71, which is last week's just say that one pivot and goes sideways, the market gets a little bit stronger. There might be a trade above 104.36 to, take it back to a better acting stock. So I feel like you had your tradable bounce last week, and now I'm going to watch it digest. If you digest above that 170, and the market doesn't fall apart, I think there's another trade there.
Scott, it's been quite some time since we went over that strict mechanics of the red dog reversal, and it's not all that complicated. Could you just walk our audience through that trade, going back on the 14th and the 15th? The low on the 14th, 94.33. You take it from there, Scott.
Okay, with the low of the day at 94.33, there were a lot of people, a lot of bears out there on Netflix. You have Citron, who basically listed as a short, saying it's going to go to 80. Some other people also said the same thing. So in order for it to go to 80, what does it have to do? It's got to trade below 94.33, and then it's also got to trade below that 93.55, which is the 9.8 low. So if you're short this thing and you're trying to pressure this below that 94.33 or to get below 93.50, then all of a sudden it goes below it, which went as low as 93.61. So it really went only about, 70 cents below that pivot, and then all of a sudden it comes back above that pivot. And if you're short there, think about the other side of the trade. If you're short and it's back above it, are you comfortable or are you a little worried considering Netflix just came down from the 120 level? I know if I was short, I'd be a little uncomfortable saying, wow, it's Netflix, there's a high short interest. There's probably a lot of late shorts coming in because of Citron, and it won't go lower. And at that point, the market was getting a little stronger. So then all of a sudden, Netflix goes from red to green, and it's just a 96, and you're still short from that 95. You're like, wow, I might have to cover here. And then if you've been out of the way because it's technically not acting well, you're like, wow, I could play a bounce here. So all of a sudden, it creates this bounce where you could have been a buyer of the stock when it crossed back above 94.33, put a stop at the low of the day, 93.60. So that's 70 cents of risk in Netflix on a stock that, earlier in the month was as high as 118. So you're getting it down, 14 points below. And then if you walk away from your desk, all of a sudden you come back at your desk at the end of the day, it closed, it closed at like 98-ish or so. Where did it close that day? No, 99 and change. So you just made almost $5 with 70 cents risk. And then, the good book of this trade tells me you take a third overnight for follow through, because if you didn't cover your short because like, oh, this is only one day. It's going to resume its downtrend, or it's going to resume the weakness, and all of a sudden the next day doesn't open up down, opens up a little bit up. All of a sudden they're like, I better cover when this gets above 99.65 because there's really no other resistance back until about 106 where the 21-day was coming down, and then all of a sudden you get your second day. Some might even stick around for a third. I usually do a 2-day trade on it, and now I'll revisit and see commitment to it, and it seems as if the last 2 days when the market got hit real hard, it didn't fall apart. So maybe there's still another trade for continuation.
All right, Scott, you've always been good on the social media names here. First, let's go to Facebook here. Holding up really well here. I mean, just I don't know. I mean, you're still safe buying it at this elevated level.
I don't have any Facebook, and when I was trying to be long, earlier last week when the wedge was being resolved to the upside, when the spiders got above like 197, I was stuck with it because also, if you look at Facebook, it was one of the first few high beta names that made new weekly highs above that like 828 high. It did that, actually not even the week before. So it showed you that this is stronger. It's still best in breed. It's above every moving average. If the market's looking for a leader, Facebook's still a leader. If you're long it on a macro time frame, it's giving you no clue, no reason to really sell it. So at this point, I'm not in it, and I'm not going to probably buy this up open. But if it can go sideways and hold above, just say 93, and build a little bit of an upper floor, then you do have another descending channel here. And if it gets above 95.50,
yeah,
it's not too far from all-time highs. And then that could give you some clues that, hey, we got some leaders in the game. Don't just have shorts on the brain, because if they're buying a high valuation stock like Facebook above 95, and if Amazon's hanging around and Google's hanging around and Apple's above, that's 114.30, you got to start connecting the dots that the market's not as weak as everyone thinks.
Very interesting chart here. You hit Thursday, you hit 95.51. You did get up into the 95 handle on Friday in a weak market. And then, man, and it doesn't even look like you're out of the woods if you clear that, because you see a high at 96.10, 95.85, another high at 95.90. So tough spot here. I guess for me, I'm looking at the double bottom here, right around 93, 92.90, 93.05. So $1.80 away from there, $1.70. I don't think you get real excited on the short side until you take that level out. Moving on here, and you talk about a stock that I saw it make its move, take out the flash crash high, LinkedIn, and it never looked back here. Now we're in the $200 handle. Boy, oh boy, nice rebound here. What's your thoughts on LinkedIn?
You know what? Like you said, this was like a stealth move. I don't even know if my traders were talking about it. I didn't even look at it. And it looks really clean, right? It got, like you said, above that 185, which gave you a big move, and then it digested above that move, and now it reclaims moving averages. I wouldn't chase it here. Does it have room to retest the 209.90 high, which is the gap from last quarter's earnings? Yes. At this point, it just came from the low 160s to the 200s. I'm not chasing it here, but I'm also not shorting it here. It's kind of good to see. Maybe I hate to bring up the dog of the group, the Twitter, but Twitter is getting real tight in here.
What do you think?
It's got a little bit of like
What do you think about Twitter?
You look at the chart, it's got a little bit of an inverse head and shoulders pattern, right? You have the left shoulder that goes as low as almost 27, and then you have the head that went to the bottom of the 20s on that that August 24th low, and now it's been getting tight. So, we like tight patterns no matter what the stock is, and if it's Twitter, even better, because I guess it's something we like to trade. If it gets above 28 and a quarter, you would think maybe, it gets a move up towards the 30s. I don't know what the catalyst is. I guess it could be the announcement of the CEO. I'm seeing a lot more ads on Twitter. I'm seeing the video on there. So I feel like everyone's ignoring the fundamentals just because they'd rather see a new CEO. They'd rather see it taken over. But who knows? Maybe, it's going to turn into a decent earnings play again if we get closer.
Definitely got a hard bottom in there at 27 and change, or 26.80 up to 27. Scott, just final market thoughts here. We got about 1 minute left here. What do you need to see in the market today to say, okay, low interest rates are here. It's good for the market. The market's going right back up to new all-time highs.
I don't think we're going to go right back up to all-time highs.
All right.
I think that if we're lucky, by the end of the year, maybe we get back up to the flat line. Maybe we goes up a percent or two. The question is though, what happens in the next 2-3 weeks? That's what I do think that from where we are now, we probably close higher than this, towards the end of the year. But do we revisit 1925 or do we revisit lower? We can, so I can't rule that out. So I'd rather just trade until we get a little bit more clarity. We have 2-3 weeks till earnings, so there's not much of that happening. You also have the blackout date on buybacks. So I want to see how the market acts now because as of last Thursday, a lot of companies are within 2 to 4 weeks from their earnings period, so they can't actually buy their own stock back, which I think over 50% of the stock bought in late August was buybacks. But now they can, so we'll see if what that does to the overall market. So with seasonality, no buybacks, earnings in 2-3 weeks from now, I'm just going to be tactical, look for two-way trades, and just really map out major levels and not try and trade the noise. The noise gets you out. Like anyone that started shorting too early last week, Tuesday at 197, they didn't stay short when the spiders took out 201 and change. They got squeezed out. Anyone who waited and said, I'm going to wait till 202 to 204, if it gets there, that's a compelling spot. They didn't take much pain, and they had the topping tail develop, and then they got actually paid with downside follow-through on Friday. So my one suggestion is don't trade the noise, only trade compelling setups, and don't chase anything both ways because it tends to revisit those spots. And if you can calculate the VWAP on a daily and a weekly terms, it tends to revisit that. So don't chase something that's too far above it, and don't short something that's too far below it because at some point it comes right back and equalizes.
It's like you have my daily blotter in front of you when you just discuss that activity from last week. Scott Redler, Chief Strategist at T3 Live and T3 Trading Group. Scott, we kept you a minute late. Thanks for staying on. We'll talk to you again soon.
Sounds great. Have a good week.